Hey, so let's continue that conversation on breakout scans. We were talking last about stocks that sharply increased on a large volume, but they came from a downtrend. This one, we're going to start defining sideways trends before the breakout. And to do this, we're going to be looking at the closing price. Once again, we'll be looking at the volume, and we'll be defining our sideways trend. Right. So let's go ahead and open up a new scan. We are going to we're going to narrow it down a little bit by looking at only US stocks. So to do that, we'll just do and country is US, right? And we're going to want the closing price for today to be greater than yesterday's. But the question is, at what point are you willing to, buy into the stock? At what percent increase do you want to see it doing better today than yesterday? So we'll be a little bit modest. I'm going to look at it from 10%, right? We want today's close to be greater than yesterday's by 10% at least. Close by, and to do 10%, it's 1.10, right? Next, we want to look at the volume. So we also want today's volume to be greater than the previous. But we want to average our volume over 20 days because we want to see that the trend is better, like over the last, it doesn't have to be 20 days, but I'm using 20 days. So we want today's volume to be greater than the simple moving average of 20. And we also want to magnify it, right? So do we just want it to be greater by how much, right? So I'm going to do twofold. I want it to be at least double when it's breaking out, right? Some people want it to be quadrupled, but I'm just going to do double for this. All right. And then the last thing we want to do is define what we mean by sideways, right? And this one's pretty important because if you get this too narrow or too broad, if it's too narrow, you don't get any stocks. If it's too broad, it's no longer trading sideways. It's actually like a whole trading system, up, sideways, down, sideways. So, let's go ahead and define this. So we're going to start with yesterday's maximum. So we're going to look at yesterday's max. And I'm going to actually look at it over 10 days, right? Which means I'm going to have a little bit more of a wider trading range. And I'll show you what I mean in just a second. So we're going to look at it over 10 days. We want this max to be less than yesterday's minimum. Also over 10 days, right? And so a too narrow of a scope would be like 2% or 5%, right? You're trying to find a stock that is not an ETF or not at the floor already, is that has been trading at 2% consistently and then breaks out. Like that's that's like, the market factors have to be taken into consideration. Even if you don't really know about market factors, it's not going to be a flat line. So we have to be a little bit more broad. So I'm going to be a little, generous here and say like 10. I'm going to do 15. We'll do 15 so I can show you. So I'm going to run it on 15 and you'll see that there's even then there's 5 results, right? So let's go ahead and look at the first one, BUR, right? So actually this is not a pretty stock, but you can, let's not do that. Let's reduce this to 5 days. I think that might be cleaner. 5 days, and then we'll even bring this down to 10, within 10%, right? All right, and we can look at Angie's List. That last one just looked really terrible. So within the last 5 days, Angie's List, not counting today, but the last 5 days, Angie's List has been trading within 10% each close, right? It's stock price, yesterday's close was at least 10% less than it is today, and which is why we see a 12%, almost 13% increase. And then if we look at the volume, it is double at least, if we kind of look at what the average has been over the last 20 days. So this is an example of why also I wanted to switch it up just also to show you like why it's so important to adjust your factors, right? You want to adjust your different variables to find what best suits you, right? So you can adjust the closing price from yesterday. You can adjust your simple moving averages for your volume. You can adjust your magnitude of your volume from 2 to 4 to 1.5 to 1, right? You can adjust your sideways range, right? Your sideways trading range from 5 days to 10 days, 15 days, 2 days, right? And you can adjust like what percent you want the closing prices to stay within by multiplying it by 10%, which would be 1.1, 5%, 1.05, 20%, which is 1.2. But just know what the effect is for each of those different changes. So I hope that was helpful. Let me know what y'all think. Peace and love, y'all.